Hello everybody, I hope that you had a nice last week trading and you're spending a nice weekend. It's not at home right now to record this, so there's a bit of noise in the background, so I hope it's going to be okay. But yesterday, for last week recommendation that we have was right here, which is the short level that we recommended. And actually this was actualized, and for a drop of 300 pips. So on the standard lot size, 300 pips is a potential of $3,000, which is quite good. One thing that I want to draw your attention to, because I got caught into this one, you see that that candle here. I think I'm going to find a name for those. I'm going to call them the whammy candle, because basically what happened is I was long here and my short stop loss was up here. Went pretty well until this hour like shoot up and shoot right back down, which is extremely frustrating, especially on a standard. But thank goodness after that I was able to recuperate from that level here all the way to that level. And this big candle here was the non-farm payroll, which, as you know, we should be staying away from the news, though the outcome was quite obvious. But in any case, this was a week of 300 pip possibility, which was nice because the currency has been in a ranging for a couple of weeks, which makes it difficult to trade. And right now it looks like we have finally some direction in line. Very quickly, we can see that this is the hourly chart, and the market opened on Saturday, yesterday, with a gap down. So on the hourly charts, it's quite possible that it's going to try to fill up the gap by going up, maybe on Monday or Tuesday, which is usually what could happen. So this is the hourly chart, and as you can see, Trend Dragon give us a very nice entry level. And of course, after this big move down, again you can see a period of consolidation that has happened at the close after Friday, of course, and we probably will see what's going to happen Monday. But the direction is quite clear. The direction is right now being down. So let's look at that a bit in details with the daily chart. So this is the daily chart, and what I've drawn here is actually different trend channel that has happened. The one in purple here was one that started to be developed at the beginning of the move, and that is the one that is in purple. And then after that you have the one in green, which is basically the first acceleration that happened from this purple trend channel. And now we are for the red trade channel. We are on another acceleration pattern, which is another downtrend channel. So what we can say from that is, well, normally we could move this green channel all the way down, but that gives us a very large trend channel. But if we do, we can see that the currency may actually get to a level of support that could signify potential technical correction to the upside. We can see that of course the last couple trading days have been very volatile and have been pushing the currency on the downside without any pause. So maybe we could expect potentially a sideways or consolidation period before it would resume the move down. So that that retracement and consolidation could happen, or it could go to the previous level of resistance and support, which is right here at the trend dragon trend line, which coincide with the top of the acceleration downtrend channel, as well as the previous level of consolidation. If it does that, you could expect it to create another level of consolidation. If it would break out of this, that would actually be a pattern of a inverted head and shoulder, which in this case it would push the currency back up to probably the top of the green channel. And in this case, we could say that the currency is actually following that green downtrend channel. So this is what we can say looking at the chart right now. So on the upside, we pretty much know that level, and we should probably draw a line here, which what I did here. That level is at 1.1280. Now on the downside, the break of 1.1 is a very strong psychological breakdown, because 1.1 was a strong level. And it's a decisive break, because the currency is at 1.08 and doesn't show much signs on wanting to go back up. So as far as the downside is concerned, this is a 2003 low, so there is not really any much level of support from that point on, except for our trend channel and this one over here. And basically we could probably see the currency go to parity, which is $1 for €1, and it's really not so far. It's only at 832 pip, and we could I mean, 832 pip can be covered in just a couple days if the market allows it. So so quite interesting. And of course the only thing that we would want to consider, I would think, is short position. Long position would definitely be a counter trend position, so if you wanted to do that, you would want to be very careful. As far as where we would enter, we would have to go into the lower time frame and try to decide that and look at the build up. So we have to keep an eye on that level of that green downtrend channel, because the currency could actually follow it possibly. But time will tell, and if it breaks down, then it will potentially follow the red downtrend channel. Now you need to realize that on the red downtrend channel, actually it's not confirmed yet, because what the currency has been doing is basically creating a one high. This is the second lower high that has been confirmed by the break of that level here, and it has, if it follows it and confirm that downtrend channel with a third lower high, it probably has to go down more to this level here, to retrace back up to create that third lower high, which would confirm that downtrend channel at that point. And then we would probably expect, when that point is confirmed, to have probably an acceleration on the downside as well. So let's look at the lower time frame and see what it says. So when you look at the hourly, actually we sort of realize that on the when you zoom the chart out, the green trend line doesn't seem to be so relevant, but on the hourly, the red downtrend channel is quite relevant and marry the chart pretty well. So this is maybe something to be looking at. We know also the level of the support of the green downtrend channel, which might be significant there. So we'll put maybe we'll put a line here, and we'll change the color of it, so we know that this is hourly, and we'll make it basically purple. Okay, so we know that this level here could be a level of support. So when you go closer, okay, so if we go closer to the hourly, I'm going to explain those lines a little bit. That red line here is actually a trend dragon weekly support that was broken. I'm going to show it to you so you can see it, if you let me. Last week that level here was broken. In trend dragon, this is quite significant, because every time that a weekly trend dragon trend line has been broken, there could be some retracement into that line, but actually means some quite important move on the weekly chart. You got 1 point here, 2 point here, maybe this would be considered the third point, so you can expect some down, but also it could be retracing to that level too. So going back to the hourly chart. So this is the explanation of the red line that is right here, which is would be a strong level of support. I'm sorry, it's a strong level of resistance. Now, that purple line is the one that we drawn earlier now, and this blue zone would probably be an area of shorting that I would consider, because there are a difference of 60 pip before the price breach those two levels that we've determined our level of support. So instead of entering now, I would probably wait and see the build up to get to reach those level, and then once it breaks those level, I would probably look at an opportunity to sell. And even though I would love to do those 60 pip, I'm a bit worried about that gap up here, that the market may actually want to fill up. So what you would be looking at is a drop down to that level with a little bit of a consolidation. Better to have even a little bit of a retracement up before breaking it down, and if it does that, it'll actually give us a stronger signal, or probability that the market will want to go down. What you don't want is to enter the market and have the market stay there for 4 days while you're sweating to see which direction the market is going to take. So for the short position, this is the area that I would be looking at, and that level is still on the 800, so it's a 1.077 or about. So probably looking at a break of 1080 figure. That would be the level where I would be very interested into looking at a break. If it confirms it. Okay, so this week look at the hourly chart or 4-hour chart based on your time frame that you can trade on, and basically look at those levels. As far as the target profit or profit target, it's it's hard to tell because it's not very much level of support to look into. You may want to actually look at the line, the down channel, or the lower level of the downtrend channel, and at actually where it is now, it's about at 400 pip. Not is going to do it this week, don't know, but quite possible that the market will want to go back down to those levels. So that's it on the upside. Not really much to do on the upside unless the market retrace back up and create a reversal pattern, which it has not done. It doesn't seem to be too keen on doing. So I would stay away from long position at the present time. Okay. So happy trading this week, and I hope that it's going to be fun. Talk to you soon. If you have any questions, shoot me an email or a comment on YouTube.